Okay, no, not introduced. Okay, that's good. Okay. So I'm just waiting for YouTube to come up and then I'll hit go. Right, okay. Right, we all good to make a start? Yeah?
Yeah.
Okay, wonderful. I'm going to click start webinar. Okay, good morning, everybody. Thank you so much for joining us for episode 2 in our Making Tax Digital webinar series. Just some housekeeping from me before I hand over to our speakers. The session is being recorded, so you would have heard that upon entry. We will be editing that together and sharing that with you after the session. You can submit questions at any time using the Q&A box, so please do that throughout the session, and the speakers will try and get to as many of those as we can towards the end. Any questions that we can't get to, I'm sure you've got many. So what we can do is we can do a download of the questions and come back to you after the session. So we'll do our very best to get through as many as we can, but just to set your expectations there. You're all on mute, so please stay that way. And we are joined today by Dominic Riley from HMRC, so really excited to have him on the session. So without further ado, I shall hand over to Dorcas McWhitty and Leslie McQuigg.
Thanks, Steph. So before we dive into the webinar, we'll just do some quick rounds of introductions. So I'm Dorcas McWhitty, one of the senior product managers here at Clearer, and I'm responsible for the personal tax and MTD delivery. My experience has been tax technology, so I've been in the industry for 8 years in various different tax product roles, stemming across VAT with having launched MTD for that. On the corporation side, Thomson Reuters, did a bit of consultancy at EY, and now I'm here helping launch MTD for income tax. Been with Waters Clear for about 3 years, so we've got loads more exciting product launches to come with our cloud delivery. So I'll hand it over to Dominic for a quick intro.
Hi there, I'm Dominic Riley. So I've been in the MTD for income tax policy team for almost 5 years now. I now lead on the guidance we have for customers and agents on gov.uk on MTD. So I'll be explaining a bit of policy and a bit of the guidance that we have today. Thank you.
Brilliant, thanks, Dominic.
Sorry. My name's Leslie McQuigg. Background, worked for KPMG doing US and UK personal tax, moved into tax technology. When my role there was made redundant, joined what's now Waters Clearer as a business analyst. Been working in tax since before self-assessment came in, and when they started digitalising self-assessment, working on the XML for online filing, I was involved in meetings with the revenue on that. Now involved in MTD, was involved before the previous postponement and during the postponement, along with colleagues have been attending the MTD technical forums. And also the co-creation meetings, which were meetings between software developers, agent representative bodies and HMRC on looking at some of the issues that were there, which say caused the postponement and how we could resolve them prior to mandation next year. Okay, MTD, I'm not going to read out the slide, but basically MTD is modernising the tax system. There are a couple of things here, say from my point of view, rather than if I do it from my point of view rather than the revenue. One of it is modernising the platform. So previously there was a platform called Computer Environment for Self-Assessment, CESA. And if you do this online submissions, it goes through to that environment. It was initially on a mainframe, and though parts of it have been moved out to the cloud. That's been replaced by a new environment called ETMP. So ET, I remember it from the film, so Enterprise Tax Management Platform, which is built on Salesforce. So MTD is on a new environment. So people are either in self-assessment or in MTD. It's not a case of being in both at the same time. In terms of mandation, initially income tax was due to be the first one that got postponed, and then for that was mandated in 2019. And income tax was due to be in 2024, in late 2023 that was postponed until April 26. And corporation tax, we're still waiting. I think still waiting for the date.
Sorry to interrupt, Leslie. Would you mind just bringing your mic down a little bit? The audio is a little bit muffled.
Okay.
That's much better, thank you.
So for partnership and corporation tax, we're still waiting for the mandation dates. Okay, so who's affected? So sole traders and landlords. Maybe I'll come back to that in a minute. The first thing is about the threshold. So from April 26, you're in MTD if your gross income from those sources is over 50,000. It's not net income, it's not profit, it's the gross income. So for 26-27, we're looking at the 24-25 tax year, and we're looking at the income being over 50,000. So what is the income? It's sole trade and landlord. So for self-assessment, you'd be looking at what's on the self-employment pages, the SA 103. For landlords, we're looking at the UK property, which will be on the SA 105, and foreign property on the SA 106. If the property income goes through a partnership and will be on the SA 104, it's not taken into account for this. So for April 26, it's the income over 50,000. I was going to say qualified income, but it's the income over 50,000. And the estimate is going to bring in 780,000 taxpayers into MTD for income tax. From April 27, that drops down to 30,000. And then from April 28, as mentioned in the spring statement, it drops down to 20,000. And that will bring in for April 27 an extra 970,000, and from April 28 an estimated 900,000. One consequence of that drop down to 20,000 is that to come out of MTD, what I mean by that is the quarterly reporting, the income would need to be below 20,000 for 3 years in a row. If we go on to the next slide, please. Okay, so this is a timeline, slide nicely prepared by Dorcas. So the first thing is we've got the businesses on the left-hand side. We've got property business and we've got one self-employment. As I mentioned just now, in terms of the property business, you've got a UK or a foreign, and it's regarded as a single property business for the UK and a single property business for foreign property. So for the UK, it doesn't matter if you've got property in Leeds, Newcastle, whether it's an agent or not an agent, or it's joint. In the same way as for self-assessment, all goes on to a single SA 105. For MTD for income tax, it's a single property business. The same is true for foreign property, regardless of whether it's in America, Belgium, Japan. It's a single property business. For the sole trades, each sole trade is regarded as a separate business, and so there'll be submissions for those businesses. The next thing is the quarters. If you look there, the first quarter is 3 months, the second quarter is 6 months, then 9 months, then a year. Now, previously, each quarter was 3 months. And what would happen is you do your Q1 submission, you'd get into Q2, you'd find you'd miscategorized something or you'd missed an income or expense. You had to go back to digital records, update them, and resubmit Q1. Now you don't need to do that. You've submitted your Q1, you find there's a mistake or omission, you update your digital records, and now your Q2 submission is 6 months. It includes that correction, and so you do a single submission for Q2. So for the year, you're doing 4 submissions. This change to cumulative quarters was to make the process of doing the submissions less burdensome. In terms of the due dates, when we get into mandation, they are the 7th of the month following the end of the quarter. That aligns with VAT. In the pilot, it's the 5th of the month following the end of the quarter. If you're in the pilot, you're in MTD voluntarily, so there are no penalties if you are late on the quarters. In mandation, or from April 26, if you're mandated to be an MTD for income tax and you miss a quarter, then there's a penalty point. I believe 2 penalty points. There's £200 penalty. Once we get past the end of the quarters, then it's doing all the other, or submitting all the other data that's needed to finalise the tax fares. Now, under self-assessment, there's a single submission. Either you're doing a PDF or you're doing it online. It includes all the other information. That could be interest, dividends, gift aid, pension contributions. In self-assessment, it also includes a calculation. In MTD for income tax, you need to submit the data, and then there's a calculation at the end. So a couple of changes is it's not the data that we have in our software that's important. It's the data that the revenue have in their system. Currently in simple assessment, the revenue issue assessments based on that data, and MTD for income tax, there'll be submission of the other income and reliefs. And then at the end of the year, we need to trigger a calculation. It'll either be done by you as the agents, or it could be done by taxpayers if they're doing it themselves. They trigger that calculation. So in terms of the process for us, we trigger a calculation with a calculation type of intent to finalise. It's shared with the taxpayer along with a calculation ID, which is a unique reference. It's not the same as an IMARC, but will give you the same benefits. It uniquely identifies that calculation. The taxpayer agrees that calculation, and that's what's submitted to HMRC. Speaking to other agents, we're aware that they're saying that they have to get taxpayer approval before submitting data. Docs will cover part of that on the quarterly submissions, but for the end of the year, that means that it's almost broken down into two phases. You've got the submission of the other data, which you'll need to share with the taxpayer before submitting it. And then once they're happy with that, you trigger the final declaration calculation, you share that, and they agree that. When they agree that calculation, then we change the status of that calculation. The calculation itself isn't touched. To final declaration, the revenue process, that an obligation for the year is finalised. Dogs, we move to the next slide, please. And I'll just take a sip of water. So the previous slide was showing, say, the flow for a single tax year. This is showing it for 2 years. So you've got the quarterly submissions in year. For the final declaration, which is submission of data, and the final declaration, that's for the previous year. The reason for highlighting this is that currently in self-assessment, you deal with everything after the end of the year. For MTD, you'll be doing the quarterly submissions in year, and after the year, you'll be working on the final declaration. So the key point we want to bring out here is in terms of the quarterly submissions, I suppose two things, one I've missed, but one of them is that you need to make that submission as efficient as possible. The second thing is those quarterly submissions, I missed that previously, they're a submission of the summary income and expenses for that business. Those are not submissions of tax returns. So if you look at the SA 103, the 105 and the 106, that level of detail that you're submitting, it's the total turnover up the other income from sole trade, the expenses for a sole trade, the rent and the expenses for the property businesses. I'm just trying to think if I've missed anything. I don't think so. I think Dorcas, it's over to you.
Thanks, Kirsty. So in the last webinar that we did, we surveyed our audience to ask in terms of the proportion of their client base who will be mandated from April 2026. 31% of our base said that it's going to impact 26 to 50% of their customer base. So if we just think back to the previous slide around that timeline, you're doing great for the first year in terms of it's going to be a bit of a teething process. You've got at the top end 50% of your clients that you're going to be mandated in, but then it's that year 2 focus in 2027 when you get the second phase of MTD, where we're starting to mandate additional taxpayers that have 30k and above. So that 50% might go up 10, 20, 30%, so that it's more like 80% of your customer base that will be mandated in that year 2 process. So where you're looking at doing the quarterly submissions, you're not just doing it for the phase 1 in year, you're also starting to do it for the phase 2 customers. So the volume is going to go up. So where we're looking at the quarterly submissions, driving efficiencies there is going to be key. That part of the process needs to essentially be on autopilot, where you're coming in and getting the unadjusted income and expenses and processing that as efficiently as possible so that you're hitting those quarterly deadlines. We know that there are some key challenges that accountants are facing today when it comes to how they're preparing their tax returns under the self-assessment process. And these are the same challenges that we will need to be addressed as part of driving those efficiencies and optimizing the workflow for MTD, specifically for the quarterly submissions. And those are things like the process improvements. So how are you getting data in from your clients? What are you looking to do to close some of the gaps around some of the blockers in getting that data? Digital record keeping is going to be the key element here to solving that problem and optimizing the workflow. But equally, where you've got some clients that aren't going to be on bookkeeping solutions, how are you driving efficiencies around those processes of getting and collating the data and processing it? The second area is around the corporate demand. So you've got the quarterly submissions that you need to do. You've also got the final declaration that you have to do. On top of that, you've also got those non-mandated clients that you still need to service on top of other services that you might provide to your existing customer base, like tax advisory, tax management, and risk management services as well. So you have to stay on top of all of those, on top of the regulatory changes and pressures that we're seeing coming through. There's also that customer expectation, right? MTD is not just new to agents, it's also new to taxpayers themselves. So there is going to be a bit of a learning curve and an educational piece that you as an agent will need to undertake with your customer base to make sure that they understand the new legislation and process change that you will be implementing at your firm, because essentially it's important to get the process right at the very start, so that you don't have any bad practices within, not just internally, but within your customer base as well, just to make sure that the data you're getting from the quarterly submissions is as accurate as possible, so that it alleviates some of the pains when it comes to the end of year adjustments, and then also when it comes time to do your final declaration as well. So how can we look to address some of these challenges? And there are some areas that we can look to around automating the tax process. A lot of the areas that exist today are relatively repetitive in nature, in the sense of the data collection process. If we take that at face value, a lot of it is you're producing tax packs, you're producing questionnaires that you're sending out to clients, and then you're manually doing some of that data entry. Is there a way that we could utilize technology to automate that, especially in a world where you as a firm might have multiple different systems that you're utilizing for your clients, especially with the digital record keeping? You might be servicing clients that are on a wealth of bookkeeping tools, not just the main three. So how can you alleviate some of that? And the answer to that question is around having an integrated tech stack and compliance process, where it is essentially on autopilot for you to be able to connect data from one digital record keeping to your compliance tool in an automated way, so that data is being fed seamlessly between the two. It's about removing some of those manual elements that exist within your process, such as the e-signing or the client approval process, and adopting e-signature capabilities instead. It's about looking at other areas around maybe your approval, your internal review and approval processes as well. Are there any bottlenecks there that could cause some delays in either getting the quarterly submission submitted on time? So those are all of the areas that as a firm you could look to provide some automation. And where we, especially when it comes to that whole data collection and digital record keeping, when we surveyed our customers around how many of their client base are on non-digital accountancy software, 30% said around 26 to 50% of their client base aren't. So again, that educational piece around finding the right solution for your clients. It's not going to be a one shoe fits all. So you might have to look in the market at multiple different solutions to service the many needs of your customer base. It's also about talking to those customers and educating them around the processes of how to utilize those tools as well. And those are all elements that will take a lot of time. So it's better to get started on those now and phase it out rather than waiting until it's too late or closer to the mandation deadline. We also asked our customers in terms of, what extent do they agree that their practice has the capacity to properly support MTD. 31% said they neither agreed or disagreed, and we had 22% that said they somewhat disagreed with this. And I think it's a lot of that has had to do with the ongoing delays that we have had with MTD over the years, and this mindset of we'll just wait until we've got more clarity around definitive deadlines of is it going to go live or not, and essentially somewhat being a little bit complacent around the MTG journey and starting too late. But again, it's not too late. We've still got the pilot process that launched in April that a lot of agents can still register their interest and take part in to help understand where some of those bottlenecks within your process exist, but equally what the actual MTD process looks like in practice. In terms of looking at the full entire breadth and scope of the tax preparation process, it kind of falls into these elements. You've got your data collection process, and as part of that, you've got your MTD sign up. Again, there are some limitations with the HMRC process in the sense of it's a one-by-one sign up, so you have to do it on a client-by-client basis. So is that something that you can start now, or are there tools available out there that could automate that process? It's around the data input options where you've got your obligations. Do the tools that you're utilizing have connectivity? Do they have integrations with third parties like bookkeeping providers or other compliance tools to make that data input journey as seamless as possible and as automated as possible as well? It's also looking at your review process, whether that be internal or on the client side. Like Leslie mentioned, a lot of our customers that we have spoken to have raised that they do want to implement a client approval step as part of their quarterly submission. So before they submit it, they want to be able to send that in for approval, just from a risk management perspective. Again, it's a shorter window of time in the sense of you've got less than 3 months rather than the compliance process that we have today in order to get that signed. What contingencies are in place if you haven't got it back in time? Again, you don't want to be incurring penalties for your clients. And then it's about some of the post work. So the quarterly submissions, one of the benefits is that you have better visibility if you're putting in quality data as part of that process to be able to see the tax liability for your clients build up throughout the year. It allows you to have an opportunity to have more touch points with your clients around conversations for tax forecasting, internal reporting, additional tax management services that you can offer to your clients in the year. So it's, if you can get all of those other bits automated, you've got enough time, hopefully, to work on some of the more fun elements around advisory, but equally doing the preparation for your final declaration as well. So I'll quickly just jump into the demo and give you a view of what we have built so far in terms of CCH IFM. So for those of you that are existing CCH users, you'll be familiar with the screen. So this is personal tax. And the starting point will be central. So this will be your launch pad, and that's simply because that's where all of your client records sit today. And we're not looking to migrate any of that in the cloud just yet, simply because we know that for a lot of our customers, there will be this hybrid element, given MTD for income tax is a cloud-only solution in our iFirm platform. So in order to create an MTD return, you just need to select the tax year. The 2026 tax year is going to be the starting year for MTD for income tax, and we've added in this new drop down within the return type for MTD for income tax. When you select that, we give you the options to link to your central workflow if you're utilizing any of the workflows, so that you still have visibility of that client within central. and so that it can drive and manage some of your existing reports that you may have with us. You get this message just to let you know that you are leaving Central, and the browser will be opened up where you can log into iFan. I'll just click on finish, and what it's doing, it's taking the client details and pushing it into the cloud. One key thing to note is that the postcode and the national insurance number are mandatory fields. If those data points don't exist within the client record, you will get an error and you won't be able to generate an MTD client. And that's simply because we use those details to pull through the obligations from HMRC. So now that we're in iFan, so I've already logged into the pool, but if I wasn't, I'll have a login screen, and it's the same login credentials that you utilize for Central that you would use for iFan once subscribed to the platform. So now that we're here, there's kind of two steps. One that we've already done, which is the practice authorization, just to give permission to CCH iFan in order to retrieve some of those obligations. And then the second is around the client authorization request if you haven't got this already. On the practice level, the practice authorization, similar to MTD for that, will last 18 months. The request for authorization on the client side last indefinitely until the client revokes that access. So you can request this through our software, and we give you the authorization URL, which you can copy and send over to your client. As this is a demo environment, we've got the request ID here that I can copy and quickly approve. Once that's been approved, we then get the obligations back from HMRC. So this is essentially what the client needs to report on, and it's based off of the prior year's tax return. So in this case, it will be the 2024-25 tax return that was just submitted, and they're quite a basic client. They've only got a UK property and one self-employment business as well. If this was a more complex client, let's say they had a foreign property and multiple self-employment businesses, there'll be a line here for foreign property and then additional lines for all of their self-employment businesses. We can then start to start preparing our quarters. So for Q1, we can go in and add our income and expenses. So what we've built out in the first phase is the capability for you to upload via an Excel file, so a bridging tool. But we will be building out functionality for us to integrate with bookkeeping providers. So we're building out a proof of concept next month so that we can test the integrations with Xero, and then we'll look to scale that next quarter and release additional functionality so that we can support the likes of Sage Business Cloud, QuickBooks, and also Free Agent as well. With the Excel templates, we do provide you the templates in software, so you can download them as separated quarters or combined quarters. And this is what the separated quarters look like. And these are tagged fields, so the fields in blue, where the system can ingest the data. In terms of spreadsheet that I prepared earlier. This is essentially what the multiple quarters spreadsheet looks like. One key thing to note is that the client name, the national insurance number, tax year, and property details all need to match what's in iFan for the system to ingest the data. We have had questions around customers that are utilising their own workbooks and whether or not they can use these. The answer is yes, you can. You could use these templates as a cover sheet for your existing workbooks and utilise things like macros or formulas to link your data into the blue input fields so that the system can ingest it. If we go back in and I upload my data, the system will flag any errors that exist. So in this case, the client name doesn't match, and also the national insurance. So we can go in and we can update this information really quickly. And then we'll also update the national insurance number, and then I can download that file and re-upload it into the system. So we get all the income and expenses figures being pulled through. We don't allow you to manually enter data into the system, simply because that one doesn't meet HMRC's requirements. The only way that you can get data in is through the Excel upload or the bookkeeping solution once we implement that. We can go in and finalize the information. Before I submit, I'll just go back into the dashboard, and then we can see that for Q1, we've got the status is finalized, and then we've got a view of the data that I've uploaded for review. Like we said earlier, a lot of our customers have given us feedback that they do want to add in the client approval step as part of this before they submit to HMRC. So that's functionality that we are going to be implementing. As part of that implementation, one of the requirements we'll be adding in is locking down the quarter once it's been finalised, so you can't make any adjustments to the income and expenses. And if I'm happy with that, I can go in and I can submit the information, and hopefully that will be a success. And then we can start to populate the income and expenses for Q2. But before we do that, if we go into Q1 again, we can see that we've got this nice little green check mark, and that lets us know that that quarter is complete, but more importantly, that it's been fulfilled and accepted by HMRC. So in Q2, we can go through the same exact process, add in our income and expenses. So the beauty of having the multiple quarters is that you've only got one file that you will update on a regular basis. And because this is cumulative, you can see that our rental income was just under 1,800 last quarter, and that's gone up this quarter. We can finalise that, hit the submit button and confirm. And then the system will progress us into Q3. We get the same green check mark to let us know that it's been completed and fulfilled on HMRC's end. And then you can do that for all of your quarters until you get to Q4, and then we can start to do our end of year adjustments. What the team and I are working on in the upcoming months is around developing the final declaration and the end of year adjustments. So you can see here we've got the final declaration disabled, and that's simply because we had built it out before the delay was announced. And what we need to do is essentially take a mothballed product and update the API so it's in working order again. What we had built out was the bank interest. We built out dividends, gift aid, and pensions contribution. And we are looking to build out all of the data sources that HMRC will offer. And similarly, the parity that we have in Central in terms of all of the forms and pages that we support for the self-assessment, we're looking to do the equivalent with the final declaration as and when HMRC releases those APIs. So if I go back into Central, we can now see that for this client, we've got the tax year created, and then we can see that it's an MTD from the type and then the application in IFAM. If I wanted to work on another client, let's go into one that I've got a bit more detail. In order to access that client, I simply just need to click on the hyperlink again. I get the message just to let me know that I'm leaving the platform. Once I'm familiarised with the process, I can always ask for the screen not to be shown again. And then the system will bring you into IFAM if you're already signed in, and then you can start your quarterly submissions for your next client. You don't need Central to access IFAM. As long as you've got the URL, you can enter it into any browser, log in using your credentials, and then you can access the IFAM platform without needing to go into Central. So that's a quick demo on the MTD solution. In terms of how it works with Central today, let's say you get an inquiry from HMRC that you need to submit an amended return. Let's say in this case it's a 2024 tax year. If I wanted to access that tax return for that client, again, I just simply need to click on a hyperlink as I would today, and the system will bring up the tax return for me to start working on in Central. So with that, I'll bring up the presentation once more, and we can start to talk through some of the exemptions and updates around the spring statement. So I'll hand it over to Dominic.
Thanks, Dorcas. So Leslie introduced the sort of main elements of the policy and the design at the top of the presentation, but we've just got a bit more detail here about exemptions and also the recent update at spring statement and some material about the guidance that we have on gov.uk as well. So this slide sort of shows the automatic exemptions, but it's good to understand that we've got sort of two types of exemptions. So those that are automatically exempt by virtue of the type of customer that they are, and also digitally excluded customers who would need to submit an application. HMRC would then confirm, look at that application, consider it, and then confirm if they're sort of digitally excluded. So there's sort of two categories of exemption. We've got the automatic ones on here. So most of these have been set out over the past few years. You know, we've mentioned the delays that have happened to MTD for income tax, but the primary, as you can see at the bottom now, is sort of 2017. And then we got out secondary legislation in 2021, amended in 2024. So over that period of time, you know, we've been iterating and continuing to review the policy and design of MTD. We did the small business review back in 2023. So this list has sort of grown as we've understood that, you know, MTD would either be sort of too costly to deliver for some customer groups, or it won't work for some customer groups. So we've got some previously set out exemptions here. I won't run through them all, but if we move on to the next slide, we can look at the ones that have sort of more recently been set out. So spring statement in March of this year, we set out on the left-hand side there some new exemptions. Again, these are sort of automatic ones. And again, it's sort of customer groups that MTD isn't going to deliver for, or it would be it would be too costly to deliver the design for them. So that's what we're sort of thinking about, those new exclusions or exemptions. And then we have a couple of different types of deferrals in the middle box here. So again, those top ones are sort of niche customer groups. We need a bit more time to sort of tweak the design of MTD to cater for them, so they won't be coming in at the same time, at the same tax years that other customers are going to be. So we've said sort of over the course of the Parliament, so we'll be setting out more detail for all these customer groups in due course when we have it. And then the second bullet there is around customers who submit SA 109 at the moment, so a supplementary page that covers residence and remittance on the remittance basis as is. So I'm sure many people on the call will be familiar with the remittance basis sort of being replaced by the foreign income and gains regime. That work's still ongoing, and we need to sort of understand how it impacts MTD. So we've deferred those customers a year until April 2027. And the other elements that were announced at spring statement, Leslie covered at the top that the sort of expansion of MTD to the 20k cohorts. So, you know, we think that's the right thing to do, what the government does. So we're providing sort of certainty for those customers, giving, you know, more time to prepare and get ready. And the other announcements that we set out, so the main one I would say is around the end of year filing. Previously, the only sort of element of the customer journey covered by MTD was around quarterly updates, and previously we had an end of period statement that had already been taken out. So there was a bit of a split in the customer journey. Customers could meet the MTD obligations through MTD compatible software, but then use HMRC online filing to submit their end of year tax return. We didn't think that was the best customer journey for customers to have that sort of handoff between, or possible handoff between software and HMRC. So they'll now need to submit the full return through their software. We think that's the right decision. And a couple of more niche sort of changes. So the digital start date at the moment is the 6th of April for all customers, relating to whatever tax year they're brought into MTD. But for some customers who their accounting date is the 31st of March, it's appropriate that the digital start date, as we call it in the legislation, should be the 1st of April. So we're looking at that change. And also the final one at the bottom there about resetting penalty points for, in some scenarios like where a customer's become insolvent, we don't want those penalty points to stand. We want the flexibility to be able to reset those. If we move on, Dorcas. So this slide's about the beta, so the testing at the moment. So we had the testing year for 23-24, the private beta as we called it, and we're now into public beta. It's not my area of expertise in the program, but I understand we're doing a lot better. We're getting a lot more sign up this year, so should have a lot sort of healthier numbers within the pilot, testing various elements of, software and also HMRC's side of the design. So this slide sort of sets out, things that you would need to have if you wanted to sign up a client, and things that we can cover at the moment, things that we can't. So that eligibility will continue to sort of expand later in the year. So we should be able to get more people in. Like most customers can sign up now, or their agent could sign them up with their permission. And I think if Craig, the director, was here, he'd be making the point that it's a really good opportunity for agents to sort of understand how MTD is going to work, test their own processes, prepare themselves and their sort of staff for the year ahead, and make sure you don't sort of fall behind competitors who might be doing that. So you could just put in like a small number of customers just to test that. Perhaps a customer that tends to be quite up to date with their filing, perhaps. But if you don't think the beta is right for you, what you can do is sign up clients early, so you can sign people up now for 26, 27. That doesn't mean they're in the beta this year. That just means you've done the administrative step of going through sign up and getting them ready. So, if you're pretty sure that person's going to be mandated next year, you might want to think about that. And you can sort of test out the sign up process if you've not done it before. It's quite quick and simple, and we continue to improve it and refine it. It takes about 5 minutes per customer. So if you have a lot of clients, you might, you can get that step out of the way at the moment. So it's certainly something to think about. So beta first priority, but if not, think about that early sign up. If we move on, thank you. And then a couple of slides just on guidance, which is sort of the area in which I lead. So we've been producing a lot of guidance through the last year. So you sort of see a list on the right-hand side of things that we managed to tick off. So definitely when we were preparing for the beginning of this tax year, getting things ready for the public beta. So I'd call out some key ones. Check if you need to use MTD for income tax. That's like an interactive guidance tool, so you can you or the customer can enter their information, and the tool will sort of tell them based on how they've answered the questions, when they need to sign up for MTD and what that means and what they'll need to do. Joint property owners. So in January, I think it was, we published the tertiary legislation that amended the notices that we had out there. We put a new notice out as well. So just basically explained the joint property owner simplifications that we have out. We've worked out for joint property owners, and those are that you can keep, in relation to the income that arises from a joint property, you can keep less detailed digital records, and on the quarterly updates you only need to submit income arising from the joint properties, not the expenses. That can be done on an annual basis. So we've got guidance out there at the moment on the notices, so if that's relevant to your client base, do take a look at those. I'm sure we can send around some links afterwards. You've also been looking more at sort of sign up. So there's been a lot of time spent on the sign up pages. So we've got one for individuals and one for agents. And there's a separate page of guidance on authorizing your client as well, because there's been quite a lot of queries we've had about the agent services account covered there. So apart from that list on the right, which we planned, there's also been quite a lot of additional work on the left-hand side. So things like multiple agents, that's something that can now be supported through MTD. So there's a new page of guidance on that sort of sets out what different types of agents can do and their responsibilities they can cover. There's quite a lot of detail in on the Create Digital Records page on gov.uk now as well. So we're covering different like specific record keeping scenarios. We cover corrections and adjustments on there as well. So there's quite a suite of guidance. We have sort of a step-by-step guide for agents. And then we have what we call the beta hub at the moment, which goes through the MTD customer journey. So when you have someone in the beta, or you want to understand what the MTD customer journey is going to be like, you can see guidance there about creating digital records, sending your quarterly updates, making adjustments, and then sort of submitting your tax return at the end of the year. And it's sort of broken down in quite simple steps. Yeah, if we can move on to the next one. And then we're now looking ahead. So there is a good amount of material out now on gov.uk, so I'd really encourage people to look. Like, it's continuing to update all the time, so you might want to sign up to page alerts and you'll get those updates then in your inbox. But there is still some areas that we need to cover or add more information to. So we're working on our plan for 25-26 and understanding like the guidance that we need to get out and how to prioritise that. And a lot of that will be done through sort of collaboration with stakeholders, so and through sort of agent and customer research. So it's very much not HMRC deciding things. Like, you know, we need the guidance to be right for everyone that uses it, and you know, we're very take that very seriously. So there'll be a lot of engagement on the plan and on the guidance products themselves. But you can see on the right hand side there the different products that we're thinking about for 25-26. So there's quite a few things still to cover off. I'd say I'll pull out some key ones, but we expect in the summer to have what's called an MTD campaign site. So that'll be like the landing page or the portal for MTD guidance. And we think there'll be a sort of agent specific one on there. So that will be the way in which you can access everything. And it will be a bit more like visual and engaging than a normal gov.uk page. The one below that is about software choices. At the moment, you might all be very committed to Walters Clear, and that's great. But if people are sort of considering software, we have a page that is flat at the moment. It just has a list of software products. This one will allow you to sort of filter down products that are right for you or right for your client. And it'll ask the client or yourself a series of questions and present them with some appropriate software. So that will help, especially unrepresented customers, sort of make the right choice when it comes to software. And we appreciate this is a whole new world for some customers. So it's really right they get the software, appropriate software at the beginning. Some other elements, sort of basis period reform, insolvency, and some more detail on penalty reform. So we're quite light on that in the guidance at the moment. And then sort of updating lots of SA products. So we've got SA help sheets, we've got HMRC tax manuals, we have SA gov.uk pages. They need revisiting. And then some areas sort of later down the pipeline would be sort of like how and why you would leave MTD, so things like cessation, and Leslie also mentioned what we call the 3-year lock. So you're in MTD unless you your income drops below the threshold. So you're in for 3 years consistently, and then on the 4th year you can opt out of MTD. I'll explain that very well. And then amendments, sort of like, you know, how it's not covered specifically by MTD policy, but how you would go about amending your return using software HMRC online services. That's probably everything I'd want to say at the moment, Dorcas, but yeah, happy to pick up any questions later on.
Yeah, no problem at all. And just to kind of close off on the software choices page, we've had a lot of questions around is CCHI from MTD for income tax ready, and we have now received HMRC recognition, so you can expect to see CCH on the software available now list. Hopefully by the end of the week is what we're targeting. So do watch this space. So just to kind of close off and summarize, a lot of what we've discussed today is just around getting readiness. We're still seeing, as part of the surveys and the stats that we've been asking our customers around readiness, that a lot of customers are still holding off and aren't getting in preparation, not just internally, but with their clients around the impact of MTD. So the first step is about assessing your clients, having a clear understanding around which client's going to be mandated through which phase. And we've got CCH reports that we've built out, and there is a link within the support portal for a script that we have built to help you identify those clients for each of the thresholds that HMRC have. And then it's about deciding your approach around which technologies you should be using, what functionalities those technologies have. Is there a capability for those technologies to be integrated, or does one provide integrations similar to what we're doing and looking to release as part of our bookkeeping integrations to allow you to centralize some of that data into one platform? And then it's about building on that. So once you've got your understanding of your clients impacted, your approach, it's then about doing internal training around the softwares that you're going to be implementing internally and for your clients, so around digital record keeping, and making sure everybody's skilled in those specific areas. And then it's just a constant point around constantly reviewing your options and your implementations. It doesn't all need to be in a big bang approach. You can do a phased implementation where you look at integrating certain elements of your processes, workflows, and technologies in an iterative way instead of doing it all at once, as that can be a little bit overwhelming. Once you've got all of that, that's essentially all of your steps to readiness ahead of not just mandation in April, but realistically, we've got compliance season approaching, and a lot of your time is going to be taken up with doing self-assessments and not necessarily focusing on your MTD strategy. In terms of the pilot, again, CCHIFM is ready to support customers that want to take part in the pilot. So if you are interested, do scan the QR code that's on the screen, and it will take you to just a form filler, and one of our teams, if it's not myself, will be in touch with you just to get you to understanding what that process in general would look like on the pilot with us. And equally, we've got the remaining episodes of the series that we're doing. So we've got episode 3, which will talk in a little bit more detail around the final declaration, which will be in September. And then we'll have the final countdown as we approach mandation in November. So definitely do sign up to the series if you haven't already. And if you can't make the dates, we'll have these recorded and you will get an email to your inbox around the recordings as well for you to view. We'll just pause there for Q&As. I can see we've got quite a few that are coming in through the chat. So we've got the first one around you missed episode 1, and Steph has kindly answered that. So let me go into all of the open questions. Note that the final declaration of 2025 is due 31st of January 2026. Yep, that's correct. We've got a question here from Matthew. If after submitting the Q4 submission and before the final declaration, I find transactions that have not been included in the 4 quarters submission, do you resubmit Q4, or can these be included only in the final declaration? Leslie, do you want to pick that up?
I was going to suggest Dom picks that up.
So you can resubmit quarter 4, so that would be the way that we would generally encourage that. But if you look on the Create Digital Records guidance, you can also include, if you're an agent and perhaps you don't have access to the records, and there is an alternative route of using the software and using what's called the BSAS API. But generally, we would say create the digital record, and it's more sort of fuller experience, and you've got the record.
Dorcas, there was a question we've missed from Alex, as in order to early adopt, take part in the trial, do you have to have completed your 24-25 self-assessment tax return? I don't think so. Dominic, is that correct?
I don't think so either.
Okay.
Brilliant, thanks, Leslie. And then we've got another one here around a customer that's contacted us about the pilot. I'll definitely reach out to you, Joanne, around the process for that. Libya has asked, does the client need a personal tax account in order to approve the authorization?
I've answered a similar question. If they've already got authorization for self-assessment, then that will flow over into MTD, so they won't need to reauthorize. If there's no existing authorization, that the agent can generate a link either on the via the ASA account or within software, and that link will take them to a login page. They'll need to log in using HMRC credentials.
Brilliant, thanks, Leslie. Why does it say due on the 5th of August 2025 and not the 7th of August 2025?
There might have been a typo, I don't know. So the quarter dates end on the 5th. The due date when we get into mandation is the 7th of the month following. In the beta, it's the 5th of the month following the end of the quarter.
Thanks, Leslie. What are the prices of the MTD solution CCH are offering? Omar suggests definitely getting in touch with your account managers, and they'll be able to run through the commercials with you. Is the workflow a separate workflow to the one we would have used for the SA returns? Will there be templates for MTD for income tax? It's definitely a question that we've got asked, and it's something that we are reviewing internally. Why does it say company under self-employment? This is a sandbox environment, so that's what we get back from HMRC in terms of descriptions, and we aren't able to change that, unfortunately. Is the product live yet? We've signed up for both iFirm accounts and iFirm MTD for income tax recently. Will we be able to have access? Yes, so there is a dependency to have the service pack release, so the 25.110 release, which is due on May 30th, in order to be onboarded into iFirm for MTD. So that is the caveat that we've got, and that's simply because we've implemented some capabilities in Central, such as task permissions, to enable you to enable or disable the iFirm functionalities. So if you have installed that, we are going to be able to onboard you. We use single sign-on on CCH Central. Will this also work for iFirm? Yes, we've got single sign-on capabilities in the iFirm platform. We also support multi-factor authentication as an additional security layer as well, so we can definitely replicate that. If we want to use CCH for beta testing and we don't have iFirm at the moment, how would that work? So you would need CCH for iFirm, and that's simply because Central is going to be your launchpad in order to create your client in the cloud. So there is that dependency. We are going to be removing the dependency for Central so that you can create clients standalone in iFirm, and that release is planned for the end of the year. Is it possible to roll a client forward now for MTD on CCH? I don't see that as an option when I try. are we behind on updates or is it not available yet? So yeah, you need to be subscribed to the iPhone platform and specifically to MTD and utilize the config key. So all of this will be as part of the user guide, but we have added in functionality which will be part of the service pack release planned for May 30th. So that's a 2025.11.10 release where you will have that functionality. Again, the caveat is you need to be subscribed to the iPhone platform in order to have that functionality enabled. Is that MTD compliant to just type numbers into an Excel spreadsheet as totals? Leslie, do you want to pick this up? Or Dominic?
Yeah, I'm happy to, Leslie, if you fancy it. So you can continue to use spreadsheets if you wanted to, but you would need a type of product called bridging software that would then extract the data from spreadsheets and submit via HMRC's API data that we need for MTD. So that is an option, but it will involve a spreadsheet and the bridging software. So customers, clients may find it simpler to use one piece of software, but it will mean sort of transitioning away from what you're used to. So I think it's sort of weighing up the benefits.
But I think in terms of the question, no, you can't just put totals in.
No.
You need to create a digital record for the transactions. If you're using our template, then they need to be summarized and totaled. So you take the total of all the income, total of all the expenses, and that's what we submit. But you need to maintain digital records. So just putting totals onto a spreadsheet is not enough. The next one for landlords is only necessary to put in income, and you could ignore expenses. No, that's not correct. Dominic, if you want to come in here, if I get it wrong, but there's an easement for joint property, where for joint property you can enter the income in year and deal with the expenses as part of the end of year adjustment. If you own the property yourself, then you're required to do the income and expenses for that property.
Yeah.
Brilliant. Thanks, Leslie. I know we're on time and we've got loads of questions remaining. We've definitely got contact details for some of these questions. So myself and Leslie will review and we'll be in contact and send an update with some answers to these questions. But thank you so much for your time and definitely do reach out to your account managers or to Leslie and I if you've got further questions on MTD.
And thanks, Dom, for joining us and helping us today.
Thank you.
Yeah,
Thanks for having me.
definitely.